What is up? It is Big Chart Trades back with another video. And in this video, I'm going to be back testing the 4-hour PO3 live. A lot of people struggle with the 4-hour PO3, right? Some people think you have to trade on the 4-hour time frame. Some people don't understand what manipulation is. Some people don't understand how to trade it. So I'm going to fully explain it in this video, and then I'm going to just back test with you so you see exactly what I'm talking about. So before we get into anything, I want to explain to you that there are two types of candlesticks, all right? There are open, high, low, close. Okay, that is a bearish candlestick. And then on the opposite side of things, there's an open, low, high, close. Okay, this happens across every single time frame. This is essentially every single candlestick in the market. This is how it moves. So understanding this is going to help you a ton, because when I say that we trade the 4-hour PO3, I mean literally we are trading this. So what it means to trade the 4-hour PO3 is it means we are getting an entry here, and then we are in the trade all the way down here into this opposing liquidity. Okay, that is literally what the 4-hour PO3 is. In a bullish scenario, we're getting an entry here, and we are trading this, and then we are exiting at opposing liquidity. So essentially what we're doing is we're catching the manipulation and trading the distribution. Okay, you remember what AMD is, right? Accumulation, manipulation, distribution. Okay, AMD. That is how every single candlestick works. Why do we use the 4-hour time frame? Why do we use the 4-hour candles? Because there are two 4-hour opens inside of the New York session. Okay, there's a 10 a.m. open Eastern. All of these time frames are Eastern. There's a 10 a.m. Eastern open, and there's a 2 p.m. Eastern open. Okay, a PO3 happens on every single time frame. It happens on the 15-minute time frame, the hourly, 30-minute, 5-minute, 3-minute, daily, weekly, monthly. The PO3 is essentially how candlesticks form. The reason we use the 4-hour time frame is because there are only two openings, meaning that when the 4-hour candle opens, there is a lot of volume being pumped into that candlestick, right? So the manipulation is large and the distribution is large, giving us a better trade. Also, it's a higher probability of playing out. Why? Because if in an hourly PO3, there are the market is open from 9:30 until 4:30. So, I mean, there are however many hours that is PO3s, right? And you have to go into the smaller time frames, right? If you're trading the hourly PO3, it's a lot less probability. The candles are a lot smaller. There's not as much volume, and you'll have to use the smaller time frames. But with the 4-hour PO3, the likelihood, wow, this is pumping right now. The likelihood of this playing out is a lot higher because there's a lot of volume in the market. Okay, so now that you understand why we trade the 4-hour PO3 and essentially what we're trading, now I could go ahead and start backtesting for you and show you the entry model that I use to trade the 4-hour PO3. But before I do that, there are two types of entry models that people use. I'm going to tell you the one that I use, and then I'm going to tell you the one that other people use. So the one that I use is a 15-minute or hourly PD array, right? And then you align your time frame to, okay, so like a 15-minute PD array. Let me do this. A 15-minute PD array is a 1-minute execution. Okay, and then an hourly PD array is a 5-minute execution. Okay, so you align your time frames and you're looking for three things on the lower time frame, right? You're looking for a liquidity sweep, SMT with ES, and a change in state of delivery, which is your actual entry. Okay, so let me explain all these terms so that when I backtest, you can actually understand what I'm talking about. If you need to screenshot this, screenshot it, okay? These are the terms. So PD array is a PD array. Okay, this could be fair value gap, order block, breaker block, right? These are the three PD arrays that I trade, okay? Fairly simple, all right? Next thing is a TF. Obviously, it's just time frame. Okay, and if you already know what these terms are, I'm just doing it for the people who don't, okay? Time frame. And then liquidity sweep is when highs are swept. So like, for example, or lows or anything. So like this is a minor high. It was swept. That's a liquidity sweep. Okay, you get me? Okay, so liquidity sweep SMT is the smart money technique. Okay, this is when there's an imbalance between two assets. So like, for example, you see how the NASDAQ swept this high. Let's say the ES didn't sweep this high. Like, let's say this is what the ES looked like. Okay, that would be bearish SMT because there's an imbalance here. The NASDAQ took that liquidity and the ES didn't. But obviously, I don't have ES pulled up, so it's pointless for me to use that as an example. And then CISD is change in state of delivery. Okay, now a bullish change in state of delivery is a candle closure. The candle has to close. Okay, candle closure above the series of down close candles that swept lows. And then a bearish change in state of delivery is a candle closure below the series of up close candles that swept highs. Okay, so these are all the terms. If you need to screenshot this, go ahead and screenshot this. Very important, because I'm going to be throwing around these terms and you need to know them so that when I'm backtesting, you understand. All right, I'm going to delete them right now. Okay, so this is the first entry model. And then the second entry model is this. It's the 4-hour candle opens up and then they wait for price to trade into a 50-minute or 5-minute fair value gap, or no, PD ray. And then I don't think there's an aligned time frame, but use lower time frames for 1, SMT with ES, and then 2, inverse fair value gap. Okay, basically an inverse fair value gap is when a fair value gap is inverse. So like right here, as you can see, these candles right here inverse this fair value gap. This was a bearish fair value gap. All right, so that is the entry model. Now let me go ahead and just show you. So I'm going to pick a random candle here. Again, this is completely backtested. This is completely live. So like I'm doing this as I'm talking to you guys. Let me find a good example here. Okay, this candlestick right here. This is a good one. All right, this 10 a.m. candle. Okay, so what do we have here? All right, we have this. All right, I am bearish right here. Why am I bearish? Because not only did we create this is my analysis before the 10 a.m. candle opens up. So I'm usually doing this at like 9:30, 9:45 a.m. Okay, I'm bearish because this 4-hour candle, there's a bearish fair value gap right here, right? And this 4-hour candle is extremely red, okay? Meaning that this is most likely going to get respected. This is a strong fair value gap, okay? If this candle was a up close candle, if it was a blue candle, right, this fair value gap wouldn't be that strong. But since it is such a deep red candle, this is a strong bearish fair value gap, okay? We also see all of this bearish momentum here, lower lows, okay? And there has been no break of structure, change in state of delivery. So I'm bearish here, all right? So what do I do? Since I'm bearish, I'll drop to usually the 15-minute time frame, right? At this point, it is 9:45, and I'm looking for bearish PD rays for price to trade into. Now, do I see anything? Well, the first thing I see is this order block right here that price has already pulled into. Why is it an order block? Well, this candle right here confirmed the order block by closing below this up close candle, and this up close candle also pulled into this fair value gap. So that's a pretty strong order block right there. So, not change in state, order block. Okay, so I see that order block. What else do I see? Maybe on the hourly, there's a more defined PD ray. I see this hourly fair value gap all the way up here. So now what I do is I will drop to the 50-minute. This is a difficult scenario. Okay, so I'm going to tell you exactly what I'm going to do. I'm going to wait for that 10 a.m. candle to open, and I want it to pull into this order block. Well, Charlie, how do you get an entry, right? How are you going to know if it's going to go into this hourly fair value gap or this 15-minute order block, right? How are you going to know that? Well, here's how. Because I wait for my confirmations. Okay, so for example, if price pulls into this order block, I'm not immediately selling. I'm waiting for a change in state of delivery on the 1-minute time frame because this is a 15-minute order block. So let's drop to the 1 minute and let's see what happens. All right, this is that order block. Okay, see what happens. Okay, that 4-hour candle opens up, pulls into that order block, trades higher. At this point, we are deep inside of this order block. Okay, there's been no confirmations. At this point, the change in stated delivery level is all the way down here, right? So this is not like a good setup right now, all right? So until we get a candle closure under that, I'm not in anything. And I probably wouldn't take this anyway because of the range. What I want to see here is, since remember, a bearish change in stated delivery is a candle closure below the series of up close candles that swept highs. So, right, I want to see this high get taken. I want to see this high get taken. Why do I want to see this high get taken? Because that means that the up close candles that swept this high would be the change in state. So the change in state wouldn't be all the way down here. All right, let me look. So let's see what happens. Okay, so that high gets taken, right? The new change in stated delivery level is right here, because that is the highest point that price got to. Okay, so look. All right, you see what I mean? So a candle closure under this change in state level would be a change in state, okay? Because this is the up close candle that swept the high. So let's see what happens. If it takes a new high, that's good. Looks like it's going to trade into this sit down close candle. Okay, since price is trading into this hourly fair value gap, remember that the 5-minute time frame is aligned with the hourly, right? So like I was just on the 1-minute time frame because we were trading inside of a 15-minute order block. But since now we're heading right into this hourly fair value gap, I'm going up to the 5-minute, right? Because the hourly fair value gap is aligned with a 5-minute execution. So let's see if we can tap into this fair value gap. Okay, we tap into that fair value gap. Change in state level is right here. Why is it right here? Because this is the up close candle that swept highs, right? So we have the liquidity sweep. Okay, we probably have the SMT. I'm not gonna go find this on ES right now. We probably have the SMT. Fine, I'll find it on ES right now. I really don't want to. What is this? March 25th. Okay, you see it's not even on the whatever. It's not aligned. That's why I fucking hate this. Well, right, we swept liquidity. Let's see if we can. I'm just assuming there's SMT somewhere here. Okay, so I'm just going to put that SMT there. And then see if we can get this change in state. This right here is the perfect change in state. This candle changed the stated delivery right here. That's the candle that changed the stated delivery. Why? Because it closed below the up close candle that swept high. Great retest right here. So this would be my entry for sells. Okay. And my target would be 2R. So how would that look? Target would be right here. Stop would go at these highs. Okay, 83-point stop. So I would size down for this trade. But this is an A+ setup. This is a great setup. So let me move this a little bit. Okay, 5 there. So wait, hold up. So stop would go at the high over here. Right, that's my stop. And then my final TP. Wait, let me just make this a little bit easier for you. And then my final TP, my first TP, let's see if this is a 2R. Yep, this is a 2.13R. So my final TP would be right here at the 4-hour low. Why? Because I'm anticipating this candle to turn red, right? This is a perfect example of an open high low close. You see how the 4-hour candle opened up, manipulated higher into this hourly fair value gap. And now my whole trade idea is that it's going to turn red. So let's see what happens. Okay, go and drawdown, and then price goes ahead and takes my final TP. Nice $2 million trade right there. But this is the 4-hour PO3. You see that right there? So that was a great bearish example. That's an A+ setup. And then we see how this 4-hour candle ends up being a red candle. Okay, and you can see how on the 4-hour time frame, right, on the larger scale, you see this 4-hour candle. You see how it opened up, manipulated into this hourly fair value gap, and then distributed lower and then closed. Okay, so that is the 4-hour PO3 on the bearish side. Let me show you a bullish example of the 4-hour PO3. Just because I think it's important that you guys see both sides of the equation. Let's see. I want to see a good. I want to show you guys like a good manipulation, a good. All right, let's see. Let's go right here. Okay, this 6 p.m. or this 6 a.m. candle right here. All right. So initially, what do we see here? All right, we see this 4-hour fair value gap. All right. Now it hasn't been mitigated yet. It's been tapped into, but remember the 4-hour time frame takes a long time to play out. So even though it's been tapped into, this is still bullish. It's still respecting this 4-hour fair value gap. Okay. So if I'm bullish, that means what do I want? Right? That means that I want this. I want an open, low, high close. That's a bullish candlestick. Okay. That's what I want to see. So, right, that candle's about to open. I'm going to the 15-minute time frame, and I'm looking for bullish PD raise for that 4-hour candle to manipulate into. Let's see what I see. I don't see anything on the 15-minute. I don't really see anything on the hourly either. Yeah, so in this scenario, what I would probably use is, let's see. Yeah, this is a bad candle. There are no PD rays here. I wouldn't trade this. It's because this is a 6 a.m. candle. Let me look for a different candle. Yeah. Sometimes you just don't trade. Like I wouldn't have traded that. You get me? Where is the chart? Okay. So let's look for this bullish example. Let's see. I want a nice big bottom wick. Let's see. Sorry guys, I'm trying to get you guys a good example so you see the 4-hour PO3. Okay. No. Wow, this is taking a while. Okay. I'll go right here. This 10 a.m. candle from October. Let's see if I can even go on the lower time frames here. Can I go on the 1 minute? No, I can't. All right, guys, bear with me here. I'm trying to give you guys a good example. This is pretty annoying and difficult, but you know, this is what it takes. All right, let's go here to this 10 a.m. candle right here. Let's see what happens. All right. So, okay, first is finding my bias. I am bullish. Why am I bullish? Because we have to fill this new weekly opening gap. Okay. So I'm bullish. And we have this momentum here. I would be bullish in this scenario. There's no reason to be bearish. So let's see. I'd drop to the hourly. Okay. Look for any PD raise. I don't really see any PD raise, although I do see this beautiful 15-minute order block. Why is this an order block? Well, because this up close candle closed above this series of down close candles that swept those lows, right? These lows right here. So if you guys notice the change in state of delivery, this is the real change in state of delivery right here, because this is what changed the direction of the market. Okay. But this can also be considered a change in state because we swept this liquidity here, right? And then we close above. So order block, change in state are the same things. Okay. An order block is a continuation. So an order block is a reason for the market to keep going higher, whereas a change in state is a reason for the market to reverse. So with this order block, okay, I want the 10 a.m. candle to open up, manipulate into this order block, and trade higher. So let's see. I'm on the 15-minute time frame. Let me drop down to the 1 minute. And let's see what happens. So 10 a.m. candle opens. Let's see it manipulate, tapped into that order block. Okay, this would be the entry, right? We tapped into that higher time frame PD array. All right, so let's see what happens. Oh shit. Whoops. Sorry, guys. As you can see, this would be the change in state, but obviously this range is too big. But for the sake of the example and for the sake of me showing you open, low, high, close, because that's what this is, I need to show you. So we opened, manipulated lower into this 15-minute order block, and now we're distributing higher. So let's just say I enter here. I would target like, okay, well, I would probably target above the new weekly opening gap. So like I would target right here. But as you can see, that shit just pumped. But yeah, but you see, like the whole point of this video isn't taking the trade, it's showing you the open, high, low, close. So you see how that 4-hour candle opened, manipulated lower into this order block, that's that bottom wick, and then immediately traded higher, right? So that is exactly how the 4-hour PO3 works. All right, guys? So if you learned anything from this video, go ahead and, and then 4-hour candle just opened up. It's 2 p.m. right now. If you learned anything from this video, go ahead and subscribe, like, leave a comment below. I read all of my comments. I figured it was time to make another 4-hour PO3 backtesting video just because you guys loved my last one and the one before that. So I just figured it was time. Hopefully this time, if you didn't understand the 4-hour PO3 before, hopefully you understand it now. But yeah, follow my socials, like this video, subscribe. Anything you need to do, do it. But have a great rest of your day. Have a great week. Have a great weekend. Happy Friday. Peace out.